Good afternoon from Dubai on this very warm day, and an equally warm welcome to everyone for this, the Future of Banking panel. For those that don't know me, my name is Faizal Bhana. I'm the Director for the Middle East, Africa, and India at Jersey Finance. Thank you to you all for listening in today. I think we have over 500 that have registered for this session. So thank you for making the time to be with us. I hope you find the session informative. Thank you also to all of our panelists, CEOs, senior executive, and founders for global banks from across the globe who will provide us a broad global view on the important discussion today around the impact of digitalization on banking. We are grateful also for our superb moderator, Ashar Nazim, and I'll leave him to introduce his panel to you in a moment. So thank you to each and every one of our panelists, and we look forward to hearing your insights on this important subject. Our aim today is for you to leave this session with a deeper insight into digital banking, challenger banks, virtual app-based banks, and other innovations and digital transformations expected in the banking sector. Our focus on the banking sector and our contribution to this sector globally has a long and distinguished history, spanning as long as our credentials as an IFC, some 6 decades ago. Jersey is an award-winning international finance center, perfectly placed to provide cross-border solutions to support the international ambitions of global investors. We have been attracting deposits and investments from institutions and private clients across the world for 60 years, this year being our 60th anniversary. Our banking model is diversified and is not reliant on wholesale funding, which means that money from other countries does not go into the Jersey economy, but instead goes into major banks in London, Paris, Frankfurt, and other leading centers across the globe. This is why Jersey has received a AA credit rating from Standard & Poor's in our last assessment for our jurisdiction. Jersey is also home to global banking organizations, and there are more than 20 bank branches and subsidiaries located in Jersey, including nearly half of the top 25 banks in the world by Tier 1 capital. And I'm very happy to say we have some of these global banks represented on the panel today. As an example of our thought leadership in this key sector, in 2016, Jersey Finance commissioned some research aptly titled The Future of Banking, which analyzed the challenges faced by the banking sector and outlined strategic objectives to safeguard the future of the industry. The report identified and analyzed a wide range of challenges, from regulatory development to disruptive technologies. The conclusion of the research was, in order for Jersey to remain and maintain its relevance and competitiveness as a leading international finance center in the future, and I'm proud to say we do maintain that relevance and competitiveness, the report found that the banking sector, and in fact the entire financial services sector, had to work together and embrace digitalization and innovation across the entire financial services sector. This was in 2016. So the drums of digitalization were already sounding loud many years ago in our finance industry. Since then, the global banking industry has slowly but surely transformed. Although impacted by a myriad of developments, challenges, and opportunities, 3 are worth highlighting in the context of today's discussion. Firstly, the COVID pandemic, which has forced banks to embrace digital transformation and develop their offerings to customer expectation. Secondly, the growth of neo and challenger banks. These have attracted to date approximately 40 million customers. And this niche sector within banking is projected to reach a valuation of close to $600 billion by 2027. Licenses for these challenger banks and digital banks have been issued in major economies globally, subject to final approvals, including the United Kingdom, United Arab Emirates, and the Kingdom of Saudi Arabia, to name a few. I'm also pleased to confirm we have one such transformative challenger bank on the panel today, which leads us on to today's discussion on what the future holds for banking with the growing challenges and opportunities from digitalization. Obviously, this within the overall value-based prism of ESG. Of course, we cannot look at ongoing developments and what the future holds without looking at the advancements in the past, particularly in the last decade, which the panel will also explore. Today, we are extremely fortunate to host a stellar panel of experts whose forward-thinking views on these topics are truly market-leading, for which we are most grateful. So to moderate today's panel and to introduce his panel to you, may I please welcome Ashar Nazim, founder and global CEO of Aion Digital. Over to you, Ashar.
Thank you very much, Faizal. Nahmadu nusalli ala Rasul al-Kareem. A very warm welcome to a very experienced panel today. Banking is being rewired bottom up, right? The entire basis of competition is set to change. Profit pools are being dislocated, as we know. Cost structures are getting commoditized. The banking world, especially the retail banking, is going mobile first. And you know, in this backdrop, of course, what we see is a number of banks spending millions in the name of going digital, yet there is little hint of a return on investment on this digital effort. There are opportunities and there are complexities, right? And this is what we are going to reflect on with our esteemed panel today. I will start with Olivier. And Olivier is, brings some great experience from DBS Singapore and being the co-founder and chief executive of Zand Bank based out of UAE. Olivier, so share with us your vision of banking with Zand. And in fact, where did the name Zand come from?
Hi, Ashar. So thank you very much. First of all, Faizal, thank you very much for inviting me. I'm very honored to participate in this panel. And it's always a pleasure to interact as well with Ashar, right? So Zand, I think it's important because when I started, right, I wanted to make sure our name or logo represent what we are going to mean for people and what is our objective and our vision. So I've been fortunate to know a very famous designer called Philip Stark. I don't know if you know him, but he works with Steve Jobs. He works as well with Virgin Galactic. He designed a lot of objects in museum, and really we brainstormed together, and he's still involved as the artistic director of the bank on coming up with what we stand for and what we want to represent. So we come up with a name, which is Zand. And the Zand is a contraction of sand, because we are coming from here in UAE. And we wanted to make it stronger. And we mix it with Zand in Arabic, which means strength. And why sand particularly? A few reasons. When you look, all the particles of sand, they are all unique and beautiful. So that represent our clients, that represent our partners, that represent our employees, the people we have in our organization. When you put all these particles together, all these particles of sand, you start creating community. You start creating a cloud, you start creating an ecosystem, and you're able to start building roads, cities. You imagine the sand, the dune of sand moving. And our logo ends up in an orb that you see behind me that is not fully complete because we are going to keep evolving. Sand is as well digital silicon. And another point is Zand, when you reverse it, is DNA Z, meaning that is a very modern, latest generation of organization and technology. So if you look at that, you have everything that represents what we stand for and what we want to be. We are digital. We are leveraging ecosystem, the community. We or built as a platform with a banking license. In fact, this is how we define ourselves. We don't define ourselves necessarily as a bank, but a platform with a banking license, leveraging very strong analytics. And we are here as well to support the digital agenda of the country. In fact, we went to a process to get a bank license. In UAE, there is no digital bank license per se. So we have to apply for a full bank license, which was more difficult to get. But when we get it, we can go in exactly the same product as any other bank in the market, except that we are going to do it differently because we are going to leverage better analytics and ecosystem.
So Olivier, if I may interrupt, I think that this sets the tone very nicely, right? I mean, again, we are talking about the future of banking. You talk about bringing different particles together to form a community. You talk about digital first. You talk about platform that happens to have a banking license. Help me understand, for your customers, how will this banking experience will be different? For coming to a challenger bank than to a standard traditional bank. Yeah.
So I think for the customer, and I will give some example later on, but I think if you look at what is the job to be done from a client point of view, both in a retail side and corporate side, one, they want things to be faster and easier, right? So there is obviously a lot of interaction, a customer journey where you have immediate kind of onboarding on the retail side, you have instant loan approval, etc. So that's one aspect. The second aspect is people want to be recognized. They want the bank or the organization to really know them and build solution around their needs, right? So that's with the kind of flexibility and scalability we have in a platform, we are able to tailor some product for client. As well as third point is people want always to get access to the best offers, for example, that is the most relevant for them. And that's where we are really going to leverage a very strong analytic platform. And on analytic platform, what is different from other banks is that the analytic platform has been built at the same time we build the overall bank. And hence all the kind of information is easily kind of available. We can really understand the client better. And the first point is obviously at the same time, we are going to give people peace of mind, right? Because we are a bank, we are licensed, and all the aspects about risk management, AML, KYC regulation is going to be well taken care of.
Great. And one more thing, then building on that, how will that change the basis of competition, right? And what I mean by that is, what do you envisage? How is the bank of the future going to make revenues, going to incur cost? How will that be different? You worked in DBS, you worked in Zand now. What kind of change do you see coming?
So first, a lot of things is around the platform with a banking license. So what does that mean? That means that we are able to facilitate any kind of financial transaction for client on retail space wherever they are, right? So for example, if they are in an e-commerce space, if they are in a ride-hailing kind of trip, and be able to offer the solution when they didn't need them. So it's really kind of, we don't have branches, so we are going really to interact with client wherever they are and through their mobile device. On the corporate side, where we see a differentiation is that we're able to, because we see a lot of, for example, here in UAE, we see a lot of corporate, we are also transforming themselves and become digital. So when you go to see corporate and sometimes big corporate there as well, they have been hiring people coming from Amazon, they have been hiring people coming from other areas, and they are really looking at how we can create the ecosystem, be able to leverage the data and be able to come up with the best kind of a price risk on when we offer them a loan or so on, right? So that's what bank right now, we see a lot of traditional banks are not ready to do because they cannot really interact so digitally with the counterparty. We are really becoming digital now.
Some really great insights. And Olivier, over the years, we have worked together with you to build this bank ground up. I guess our audience would love to know what were some of the key decisions, the complex trade-offs you had to agree to when building this bank ground up.
Right. So there were quite a few decisions, and it's more around, I would say, around guiding principles that we really need to stick. What do we want to be and what we don't want to be? I think it was very important, and we have to focus around those strategic strengths, which are again around platform with a banking license, ecosystem focus, digital focus, data first kind of organization, always supporting the UAE digital agenda wherever the UAE is going to grow and develop. So that was very important. The second aspect is to be able to build a bank from scratch. Previously, I built some bank in India, Indonesia, Vietnam, but it was always on top of another bank, an existing bank. And doing it from scratch with not the structure of a bank is adding a lot of additional focus. You need to build your compliance from scratch. You need to build your risk management from scratch. You need to build even the HR.
That's true. But what were the key trade-offs? So is there one key trade-off that you had to make that you keep reflecting on?
So I think, sorry?
Any key decision or key trade-offs that you made?
So it's really not to want to build everything yourself, and always being able to bring the best we can find in the market to help us build the
ecosystem plays what I hear. Yeah. Lovely. Olivier, I think that's some great insights and sets the tone very nicely. And I would love to now move to Yetunde and learn from her what is happening in the larger African market, and especially with her role at Standard Chartered Bank. So Yetunde, from SCB's perspective, right, what are the top 2 or 3 disruptions you see making the most impact in the Africa market? You're mute. Can you unmute?
Thank you very much, Ashar, and thanks, Faizal, for having me here today. Yes, Ashar, for us in Standard Chartered, the pandemic has totally reshaped the banking industry. If we would like to look at it in 3 big categories, you talk about our colleagues, clients, and the communities that we are in. When we think of our colleagues, you think of what has happened post the pandemic. Even before the pandemic, actually, in Standard Chartered, we were already focused on changing the way we work, changing how we were able to serve clients. And that was in investing a lot in to create avenues to improve productivity and drive innovation. For our clients, it was how do you serve them better? Digitization, as you know, has totally disrupted everything. And the normal or historical brick and mortar no longer made any sense. Even before then, actually, we had actually been closing down our branches in Africa. So Africa too is going through the digitalization pace. There's a disruption. We're using
but
more.
What are those 2 or 3 disruptions?
And that has been accelerated.
Yeah. And can you
so digital.
pinpoint 2 or 3 digital disruptions which have had the most impact?
Okay, so we have the pandemic, definitely. Then you have the digital. I think those are the 2 key things that have
kind of like
changed the way we operate.
Right. And within digital, would you say it is about the digital acquisition of customers? Is it about serving the customers in a different way? Is it about any specific technology, like your collaborations with telcos in the larger Africa market? So what has really proved to be really impactful in your experience?
For us, we launched what we call the digital platform in Nigeria, in CDI actually, some years back. And that just changed the way clients were being able to be onboarded. So from the comfort of your home and from the palm of your arm, using your phone, you can easily onboard, you can open an account, and that's totally changed and ignite our client base. So we use the digital platform using what we call the SC Mobile to sign on clients, and also the way we serve clients. You don't have to walk into our banks to be able to do your transactions. End to end, you can initiate a transaction online, and you can perform whatever service that you need to do. And so that in itself is changing the landscape in terms of how many branches that we have. Globally, we're in 659 odd dynamic markets. But what we're doing increasingly is reducing the number of brick and mortar that we have and using the digital platforms to reach our clients, to increase our client base and to serve our clients.
Yeah. And Africa continent is of interest to a lot of our audience, right? I mean, and so do you see any trends which are kind of different from the rest of emerging markets, like need to be prioritized more? Any of those disruptions need to be prioritized more or less?
I think, Africa, we all still have this challenge, which I believe is also everywhere in terms of infrastructure. And so that in itself is changing. It's impacting the way it's growing. I think that over the last few years, because of the pandemic, a lot of infrastructure investment had to be done across the bank. We are in 17 markets, and we've had to invest largely in this. And this had started some years back where the a bold decision was made to invest about 3 billion in our digital platforms and about 500,000 of that in only our retail business. So there's a lot of investment that has to be done in the digital space to be able to deliver the services to our clients. We need to think client. The client wants faster, simpler, better services, and they want you to simplify things. So in everything we're doing, we're thinking client. In Africa too, is the same thing, just like you have globally. You have to satisfy the clients. The clients are savvy. They want the comfort. They want seamless services, and you need to be able to provide this.
The criticism on traditional banks is that they are not used to having a collaborative mindset, right? And it's partly so there's a tendency of doing it all built in-house or a vendor-client relationship. So not exactly a partner ecosystem we are talking here. How far is that true when it comes to SCB or other banks that you see in the market, in your market?
I think collaboration is key in the market we're in. You have to collaborate, otherwise you won't be able to survive. You can't provide all the services. In Standard Chartered, what we have done is how we actually have a team called the SC Bank Ventures, who have been challenged to look for fintechs, and we've been doing that, partnering with fintechs and building partnerships with ecosystems to see how we can have a elaborate platform for our clients. And that is like a lifestyle platform. And
No, this is really good to hear, and clearly there's a mindset change that is happening.
Definitely.
when it comes to international banks as well, in terms of collaborating and talking about more of a ecosystem play. And we've got more bankers, but before that, let me come to Aidan now. Aidan, how, of course, you've got an outside-in perspective, or you're working with a number of different banks. You are the engine that's powering a lot of these banks, right? So how are different segments of this industry, financial services industry, adjusting to some of these exponential technologies? What are your views on that?
Thank you very much, Ashar. Appreciate the question. Yes, so BankClarity, to clarify, we're not a bank. We're not a challenger bank. We sit in that the middle of that Venn diagram between really the international clients accessing service providers in places like Jersey, and then needing to access banking facilities. And really, we're really born of those non-bank financial institutions' hunger for efficiency, for stability, for control over their payment activities. And when you'll know yourself, most of the panel will know, when you're multi-banked, expecting every single one of your banking partners to be nimble, to be agile, and to deliver a flexible front end for your services is just not going to happen, particularly in the international finance centers or cross-border area. And so really what we've seen, in answer to your question, is we've moved certainly in our marketplace from a wide range of consolidation, where many different service providers who administer alternatives, alternative funds, or administer private wealth are consolidating. And now they're seeking efficiency, they're seeking value for their clients, and they're seeking more straight-through processing and efficiency from their banking partners. And that's moved on at such a pace because there is a significant amount of capital behind these organizations. And that capital is also invested in, through its funds, fintechs and some of the fastest moving global fintechs. So they know what they need, and they know what they need, how to articulate what they need. So we're seeing the first movers really are those that are typically based in locations like Jersey, but Singapore, Luxembourg, further afield, of course, Dubai, really taking control of that. I'll call it the delivery mechanism. So that first point of contact for their underlying clients, controlling as much as possible of the transaction and the experience for that client, and then partnering with banks through APIs and file gateways to ensure that the bank's role is not a role where they're trying to consistently adjust and be nimble at the front end, but actually focus on what they're so exceptional at, which is stability, which is surety, which is about providing products that are relevant to their market. And what we're now seeing is, and actually it's really borne out by Yetunde's comments, a move from where, I'm a banker myself, I spent 15 years in the banking industry, a move from where banks were largely protectionist, forced to adjust post-GFC. I think a decade of repentance has meant that the banks have seen challengers and tech companies take a lot of the low-hanging fruit in many respects. But anyone who underestimates the power of these banks and their ability to reinvent themselves, to innovate, I regularly say that rumors of banks' demise are greatly exaggerated. And what we are seeing is banks engaging very proactively with BankClarity and our clients.
So I hear you. Again, going deeper into it. So are there any specific segments of this industry which are ahead and which are lagging? Can you identify some of them?
So I think we've already touched on the, I'll call it domestic consumer. So it is, entirely logical that because of legislative changes, policymaker approach post the financial crisis, that this was all about protecting the consumer and client money. And so what we've seen is developments such as open banking, which were entirely driven by directives from policymakers, actually being grasped by innovative tech firms and others, and actually have become, really the fastest moving area of consolidation. But most of that change has been, certainly in our observation, domestic consumer. So I'll talk dollar-based.
And any one or two areas which you believe are still lagging, or the market is yet to focus on it?
I think
the area. Results?
Well, I think I'll call it institutional cross-border. I feel is lagging, and it's lagging because, frankly, there's still, and it's incredibly fragmented. There's no single push by one regulator or one major domestic regulator to force change. And when you have an incumbent client base, which is incredibly lucrative and captive, it's less likely that you're going to, but especially, I think people forget that these banks have shareholders and stakeholders, and you're not going to, it's why we haven't seen what I'll call an API culture amongst those banks, which we see across the rest of the tech world, which is that open door, come and innovate with us. And this is
very interesting and sets the tone very nicely for David, I guess. David, institutional cross-border banking is yet to take off in the digital space. Do you agree?
Oh, totally. Firstly, look, thank you very much for having me. Good morning, good afternoon, good evening.
And I know it's very early morning in the US, so thank you for making time.
Yeah, no worries at all. Look, I would simplify Aidan's comment in it's hard for all the reasons he said and many others, right? I think it's a hard segment of the portfolio to crack. I think people are making inroads. I think it's going to require some regulatory and policy making enablement. I think it's going to require customers to change behavior. I think the pandemic.
Talk about one or two examples. Can you help us with one or two examples in that space?
Yeah. So let me build on what Aidan's saying. If you look at API calls, right, just API call volumes in places like China and India and Africa in the B2B in the corporate space, it's exponential nonlinear growth. It's unbelievable. But what is more interesting when you dive into that data, and someone like Hsbc gets to see all sides of the commerce, all sides of the transaction. When you dive into that, you can start to see the innovation that is occurring on top of, API developer portals, on top of products. My personal view is I don't actually think banking has been significantly disrupted. I think there's been some great derivative products. I think there's been some great innovation. People already have spoken around how we've made things better, simpler, easier, friction, but not true disruption, not a complete change in how banking market operates. And I think, as we collaborate, as we start to become more open source, actually that innovation won't necessarily be banking per se. Banks will be the enablement of that opportunity, of that innovation, of that economic stimulus. And look, if you go back to first principles, that's what banks have always done. It's just for a different distribution model and a different channel.
Very interesting. And to get some context there, like in UK, after open banking came into being, in 2018, number of API calls were 66 million. In 2020, the number of API calls were 6 billion plus. So when you talk about the non-linear exponential growth, and UK is still a smaller market compared to some of the other. Right?
Absolutely. Look, this is where the next phase of banking is. I think, if we were to even talk about challenges, I think the challenge for banking is relevance. It's how do you create that personal interaction, that customer experience where you're a trusted advisor and a custodian in a world where, banking will be ubiquitous. It won't be you go to your bank. It will be banking occurs. And we're already seeing this inconsistently in the consumer market, in the small business market, but actually we're seeing it in the corporate and institutional market as well. And I think banks who misplace that first principle around trust and relationship, those are ones that are going to be significantly disintermediated in the medium term.
Excellent point. And I think that reiterates what Olivier said earlier as well, that banking needs to just occur, right? It has to be embedded within the lifestyle of people. So here is a curveball, David. Which banking practice, in your experience, is already dead, but we are slow in recognizing it?
Payments.
Just turning a blind eye to it. Payments. Help us understand more.
So where to start with this one? So if you, over the last decade, if not the last 20 years, there's been disintermediation around where people store value. Like, I'm a simple person. Banks do three things. They store value, they move value, and they provide access to credit, right? It kind of dumbs down to all of that. That storage of value is being disintermediated. If I look at myself as a consumer, I used to have all my money in the bank. Now I have some in Venmo, I have some money in Apple Pay. It's been disintermediated. I don't see the regulators reducing liquidity requirements. So actually, and we're in a bit of a false dawn here because of the amount of stimulus and investment that's gone into major economies around the world. But I can see there being a structural challenge around liquidity. But the customer experience is going to be around the payments. And you can see with many of the tech companies, they've gone into the payment space. And banking is a commodity business anyway. It's a utility. And I think that one is already so commoditized that actually it's going to be a loss leader going forward. And it's going to be a sort of competition to the bottom and not a huge value pool that maybe we've seen historically.
And, a simple example, of course, to build on what you said is with account-to-account access with open banking, suddenly that 2.7% or whatever you're paying to these, MasterCard and Visa is a question mark, right, in some of the markets already. But what is the next big disruption in the payment industry that you see? Any stats, data that you can share with us? I mean, how will the revenue pools shift? What do banks need to do differently?
So I think ISO 2022 will have, huge impact on the future of payments, like huge, unprecedented impact on payments. And actually, my personal view is that could go one of two ways, right? Very, very quickly. I think the big disruption to payments is it will be a loss leader in your proposition.
Interesting.
It will be a loss leader in your proposition to ensure that you remain relevant and that you can tap into other pockets of value and value streams for the customer.
So that's a huge, again, shift, right? A loss leader to remain relevant. Is this something that banks need to reflect on? Talk to us about HSBC, and give us some flavor, right? Which areas have you tried to disrupt and it has not gone as planned and still is work in progress?
Okay. I am the Chief Operating Officer in North America for the commercial and the investment banking. So look, I'll I'm not going to profess to be in any way the consumer space. I think big traditional banks, inclusive of HSBC, have struggled around creating new revenue streams. I've said already, right, most of the product innovation is a derivative. It's a derivative product. Most of our channel and service disruption, if you would call it disruption, is sort of innovation. It's making something that already existed better or eliminating something that historically was there. I think banks have had a hard time, and you can see this with, a number of product launches across many of the big banks in many markets. They haven't been able to commercialize, and I think someone said it already, achieve the return on investment. Fundamentally, and again, it's already been said in the conversation, fundamentally, I think that is because banks haven't been as collaborative as other sectors, right? They have tried to sort of own the value stream, and it's kind of legacy thinking. I also think one of the challenges facing sort of large organizations is that legacy. We talked about, I think it was Olivier saying, sort of building from, a white piece of paper. Day to day, I feel the opposite. Building on legacy is hard. But it's not just technology debt and legacy in that respect, it's customer legacy. If I look at mobile payments in Africa and China, they're significantly higher in adoption than the UK, Europe, and the US. And building that hybrid model that caters for the legacy customer behavior, the legacy technology, while still trying to launch new products that are truly disruptive, but banks haven't figured that out. And you can see that in product launches, in business launches, and the return on investment on such launches.
Some great insights, David. Yeah, we're talking about payment as still an area that requires a lot more disruption going forward. Banks need to see the role of different revenue streams within their overall portfolio, which one are loss leaders, and how to remain relevant. You talked about new revenue streams or the lack of it in the commercial corporate space that we need to focus on. You spoke about banking to just occur. Banks lacking is still the collaboration mindset. And very rightly, the legacy is a reality, and how do you deal with that? And that, very nicely sets the tone for Ahmed in Bahrain. Ahmed, you've been a banker, and you're now an entrepreneur, right? And you've had a lot of exposure on the technology side with one of the largest regional banks. How is this legacy issue, right? How is the IT department of the bank reinventing themselves, or what do they need to do to reinvent themselves? I mean, it's not an easy question, right? I mean, I was in a boardroom discussion, and the question to me was, Ashar should help us understand, how do we write off this tens of millions of dollars that we've invested over the years?
Yeah.
Right. So how are banks tackling with that question?
Yeah. Thanks, Ashar. Well, I think it's not only the legacy systems that we need to deal with, but it's also the legacy mindset. And I think that's the challenge we have. And it's not just the IT department, it's also, it starts from the top. So if you want to be a leader in the digital banking and so on, it has to be, you have to have that vision from the top. Where do you want to position yourself as a digital leader and so on? And it cascades down on the organization. So it's the difficulty becomes is that if there is no clear vision on where we want to go in the digital era, things are not clear from the board, then onto the executive management, things becomes difficult for things to also to come from a bottom up. So from an IT perspective, I think we also that department share the blame of having a legacy mindset, because I'm talking IT, so we come from a field where we were used to have everything in our data center, having things done in our way. We deal with vendors transactionally, not as a partnership perspective, as well as emerging fintech and service providers are also seen as a transactional vendors. So I think it's very important that we eliminate the legacy mindset, starting from the board down to the executive management, and finally with IT, whereby they need to also ensure that they think forward for the betterment of the customer at the end of the day, but also what is important for the bank to achieve their objectives and serve that customers as well.
Interesting. And talk about some of the habits they need to shed, let's talk specific, right? I mean, what are some of the habits they need to shed, the technology teams at banks?
Well, I think there are habits in terms of focusing purely on technology is not serving well. We need to start communicating how this technology really impacts the digital vision, how does it impact the customer experience, and so on, and talk more of a banking sense, business sense, instead of technical. We just need to upgrade from XYZ just because of this is the new technology. But how does this technology translate into business objectives, serving customers is essential way of communication. The other aspects that we need also to shed is that we still, although we say that we are technology driven and we say, but in reality, we still have that old mindset of data center driven, everything is developed in-house and so on. So
and therefore will an incremental shift help, or is a shake-up required? And if it's required, then is it happening enough?
Yeah, I think it depends on the market that the bank works in, because we've seen in markets that are really aggressive and it's purely driven by regulators. They're pushing digitalization, they're pushing regulatory sandbox, they're pushing open banking. It's being driven from outside, and digital banks are coming, so the factors are coming. But in other countries whereby still regulations did not push the banks to be there, regulations whereby no fintechs, no real competition, the bank and the IT department still complacent to the way they're standard, unless there is a compelling vision coming from the board to push them and become a leader, just because the bank needs to be a leader, not because of being pushed by regulators.
And you were the group IT head of a major regional bank, right? I mean, that is a huge mandate that you carried. Help us understand what didn't go as planned. What would you have liked to achieve more? What is your advice to banks right now out there?
I think it is very important we start from the top, putting in new technology, new tools, things that are, mainly maybe helping the bank internally, will not yield to that much of results. Banks need, CIOs needs to work with the CEOs to really paint a clear picture on what's happening in the ecosystem of the financial industry. What is required for the bank to be a leader in that financial industry. And remember that the ecosystem or the battlefield that they're talking about, the financial industry, is not only banks to banks. Now, we're not competing with banks. We're competing with telecom companies, with tech giants, with new breed of neo and challenger banks. So understanding and conveying that overall picture and putting in place a strategy and a plan to move toward that digital leadership position, I think that's the key focus area.
Interesting, very interesting. And I think some very pertinent points. Technology comes later as a mindset that comes in first. And Olivier, I mean, coming back to you again, we've been discussing many of these topics in previous months as well. But, and every bank apparently is digital, is fintechy, and still there is so much to be done, right? There are all these new skills as well that are central, I would say, to winning in the digital age. And some of those are excellence in, let's say, business propositions, or excellence in partner ecosystem play, or excellence in design thinking. Now, where do you feel your team is good, and where do you think you need to invest more?
All right,
to be the bank of the future?
Yes, that's a good question, Ashar. And after I will maybe mention a few. I like what Ahmed and David said, and I would like after that add a few points. First of all, I think when we build a digital bank, you need to combine the DNA of banking with the DNA of digital. So DNA of banking is, at the end of the day, is the essence of what the bank has. Is a banking license, which means good risk management, good understanding of regulation, AML, KYC, security, etc. This is what you don't want to compromise. So you need to hire people who are coming from a bank background. And because that, you don't learn it in books or in university. You have to go through several crises to understand that when things go wrong, they can go wrong very quickly. So we have hired very strong people with a lot of experience, like myself, coming from Citibank, many years across the world. Former CEO of Citibank, Banamex as well, is in a team. So and strong people in compliance, but people who are ready to change is important, because the mindset, as Ahmed mentioned, is very important. I think the main blocker, right, to digital is not the technology, is nothing else. Is your model, your model and your mindset, right? Is a key limitation, and you need to bring people having a digital mindset, and digital DNA is about customer centricity, meaning making product or solution for client, not for the bank. Better leverage of analytics is very important, and at the same time, be able to leverage the latest technologies, the cloud, understanding what's going on, what's going to happen, right? The DeFi, decentralized finance, etc. So for this, we have been bringing a group of very talented people, some people coming from Google, some people coming from Virgin Mobile, some people coming from very techie startup or company. People that usually we have been in bank for many years. You cannot keep more than 6 months in the bank, because they cannot kind of cope with the way a bank are doing things. So we have been working for the last 2 years, and we have great people. And I can tell you, with 20 people on a tech site, they do the job sometime in the bank, and you need 500 people to do before, right? So all this is very important, or you build it from scratch. So it's all this area where we need people. I know what I see now, what's coming very strongly, and is about decentralized finance, about tokenization, right? Particularly on the corporate side, tokenization of assets in order to release value in private assets. That gives much more opportunities than what was happening previously, right? So my background as well is on security services. So I think that be able to tokenize your product, being able to add some kind of computerization programming into your contract, allow you to solve a lot of issues that you face, for example, in terms of DVP, true DVP, etc. So there's a lot of things happening, and I'm looking very closely as well what DBS has been doing, my former bank. And they issue, like this month, they issue a corporate bond token in a token form, 50 million Singapore dollar. There is so it's coming really, really fast. And I think when you look at the future of banking, and is the next stage of evolution of open banking, where you end up having decentralized finance, you are going to have a lot of players like the payment
Very interesting,
company. Yes. And I agree, right? They are not going to be anymore the bank business. But in this decentralized network, if you want, what is the bank value? And the bank value will be to bring trust into the network. And you can see right now, you have a lot of examples. Even you talk about the initiative between Standard Chartered. I think Standard Chartered, you have from Standard Chartered, Hsbc, happening in terms of create payment faster, right, through CDC, digital coin, right, backed by fiat currency, is where a bank is going to add value, because it's safer. You have the brand, you have the regulatory compliance, you have all this. So this is probably where bank will need to focus on going forward.
And you know, I don't want the point to be lost. I think there's some great points, and we're also getting some good questions. #Global Jersey and Slido is what we are doing to receive questions if any of the audience want to post. There are a number of ones coming in. But Olivier, something that I've seen in practice that you put in is the team mix that you brought. And against all odds, against all challenges, you brought in a bigger mix of non-bankers to build Zand Bank. Now that I felt is something very interesting and not very easy for many banks to do. I'll pose the same question to Yetunde, that, you know, from a skill mix perspective, and when we look at your team, when you look at your team at StandChart, business propositions, partner ecosystem, design thinking, they are some of the key areas of emphasis. Maybe there are others as well, right? Where do you think as StandChart you're doing well, and where do you need to do more?
Thank you, Ashar, and good question. I think for us in Standard Chartered, we realize that we have to continuously innovate. So we haven't arrived. It's still a long journey. And that is why one of the reasons why we launched what we call SC Ventures, whose mandate is to rewire the DNA in our bank. As one of my speakers had mentioned, it's also legacy mindset. How do we change that over time? It's not just technology, but it's the entire approach that the bank is taking with regard to innovation in general. We're trying to identify what banking will look like in 10, 15 years. I mentioned to you earlier how even before the pandemic, we had gone about reducing the brick and mortar, and that is forward thinking. We did not know the pandemic was going to happen, but we realized that looking at the trends, historical data, there would be a change. And so in continuously changing, I think that we're doing a good job in that. We need to be more agile, I think, because the rate of change is so fast that as you change one, something else is coming up. And so you need to just continuously innovate and change and just think client. For us, I think that we are just thinking client. We're focused on clients. We're client obsessed. We try to understand what our clients need at every point in time. And based on that, we're developing products.
So very good.
And
so I hear that partner ecosystem, is that what you're focused on? And what is that one area that you still need to increase your focus going forward?
Sorry, I didn't get that.
What is that one area in terms of your team mix that you want to increase focus on going forward? Like, are you?
Are we?
No, business propositions, for example, partner ecosystem, design thinking, a number of other areas, right? I mean, functional experts. Where do you need to invest more as StandChart, you feel?
I think, in my view, I think that it's in those partnerships, in those ecosystems. How more can we collaborate to get it done? Yeah.
No, thank you for that. And Aidan, or before Aidan, maybe David, from a banker's perspective, again, the same question to you from the corporate commercial space, right? What are the skill mix that you feel you've done well? And where do you think you need to invest more?
So I think your first question to me was around challenges, right? I think probably the largest challenges financial services sector has is talent, right? Talent for today and the future challenges and opportunities. So huge amount of investment going into the current workforce to sort of build the skill sets and capabilities that we've been discussing, right? Design thinking, service design, business architecture, things that banks haven't had an abundance of or put as much sort of emphasis on. I think we also need to have a look at sort of how do you create an environment that attracts the right types of people, a more entrepreneurial mindset. So it's not all about bringing people in. It's what's your incentivization program? How do you change sort of the way banks collaborate and the mindset of the people that's going in there? So but this is a complete overhaul. Ironically, I spend a huge amount of time with our HR function thinking about how do we sort of build, attract and retain talent. And I think, this is a huge emerging risk that we haven't tackled fully. And I think, again, it's going to be one where we have to do it around collaboration.
Right. So again, a good candid view there. And Ahmed, same question to you now as an outsider, as an entrepreneur, right? I mean, where do you feel that some of the larger regional banks need to focus on? Where are they going terribly wrong on the team mix, skill mix that they have?
So I think, it's a mixture of what everyone said. But specifically to the region, I think we need to focus on the capabilities of the bank, whether it's from the business side and the IT side. And when I say capabilities, is the talent, people, the processes, and how do you generate revenue to the bank. So I think,
Ahmed, what I'm hearing is we are still talking IT and business, whereas some of the challenger banks have taken a more composite view of saying they're not too separate. They actually need to fall under one to build proposition, and it's a proposition team. So
yeah, correct. I mean, at the end of the day, what is being served is the customers, and whether it is IT or a business or digital, however you want to segregate the things internally at the bank, it is the capabilities that the bank needs to build internally. And improve.
Which ones? Any specific one that you can share with audience where you feel banks are really lagging badly?
See, I think at least in our region, which is the countries we operate in, mainly it is more of customer-driven rather than product-driven. We still feel that we, especially in Islamic...
customer-driven. No, I think that's very aptly put. Thank you, Ahmed. And same question to you, Aidan. As an outside-in view, where do you feel that banks, when preparing for the future, are really lagging? And where is it that they're doing well?
I think there's a theme right throughout this conversation, and particularly struck me when David was commenting on this. You know, there's an inherent a respect for the bank's paradigm here, and the fact that this is incredibly difficult. And there's some questions I see appearing on Slido focusing on challenger banks versus banks, etc. I mean, what's apparent to us is that, and in answer to your question, is that certainly the biggest banks, the successful banks we see operating in places like Jersey and the UK, are recognizing, I guess, this point that David made around what their greatest strengths are, and recognizing that, just like Yetunde said, that if they partner with fintechs who are more agile, more nimble, they can be incredibly successful. I still think there's a lot of resistance because at a balance sheet level, at a leadership level, there's still a lack of understanding or comprehension of how fast this is moving and how attractive banks are as partners. They're sitting on enormous client bases, and to organizations like fintechs who can achieve scale rapidly and they're commercial animals, they're incredibly attractive partners. I think I would make one point, and I see it markedly in places like Jersey, which is a real concentration of wealth and sophistication, is policymakers still have an enormous task at hand here. It's not just about facilitating things like open banking and payment services directives. I think onboarding, the ability to actually open a bank account, is not the problem of the banks. They do have to deliver, they do have to be efficient, but their hands are largely tied. I think there's a significant challenge here we see across these markets, particularly for international clients. And I think all banks plus policymakers need to be proactive in the way they provide the facilities and services to these clients. I think it's a huge issue.
I hear you. I hear you. And, this is, again, very exciting. And we can, of course, continue for a very long time, but we are nearing the end of the session. I will use my discretion to actually go another 5 minutes over, Faizal, if that's okay. And I want to go around the table and pose a 30-second question, right? A 30-second question to each one of yourselves, please. And we've got a number of questions as well. By the way, if we are not able to answer any one of them, then again, Jersey Finance Faizal's team will come back to address those in those thought leadership sessions later on as well. So the question to you is, and I'll start with David, any regrets on the digital effort that you've put in the last 12 months? Your one regret?
That we didn't pursue digital identity aggressively.
Interesting. And what is your commitment for next 12 months? One major commitment one major milestone you want to achieve?
The next 12 months for us is around business model innovation. It's getting past that, making things slightly better and digital. It's about changing our business model to be fit for the future.
David, I must say, love it. The focus on actually changing the foundation is what I hear, right? Yetunde, again, same question to you. One regret from last 12 months. And what is that one milestone for next 12?
One regret, Ashar, that's a little bit tough. Faster. Can we be faster? For me, it's how fast. How can we be faster? Yes, that's one thing I would say.
And what is next 12 months commitment to yourself? What will you contribute to the digitalization?
Innovate, continuously innovating, thinking client, simpler, faster, better.
Thinking clients, interesting. Aidan, any regrets from the last 12 months, and what's your next milestone you want to achieve in the next 12?
No massive regrets, because it's been an incredible ride.
But
I would say, okay. I mean, key regret is not spending more time educating our market about just the sheer breadth of solutions that are out there. It is incredible, the pace of change and the breadth of solutions available in the ecosystem. And then looking forward, really, a huge priority is, and we haven't even touched on it in this topic, is understanding and investing in artificial intelligence, machine learning. Again, we see it across other industries. The impact is astonishing. And I think we haven't talked about data nearly enough here, but data is the answer really here in terms of all the efficiencies we're talking about and improving the client experience. So
that's a lot of targets you've set for yourself, and Faizal's
ambitious.
Supporting it, and they will get you back on this panel next year to check against this commitment you've made.
Yeah,
and the same question to you: regrets from last 12 months and aspirations for next 12.
I think you were talking to me, but I got interrupted. Right. So regrets, I think the most regret is when advocating on digital, the importance of tackling digitalization and the competitive landscape, is that we started bottom up. I think we should have also focused on advocating the board at the different levels, as well as the executives. Yeah.
And your aspiration for next 12?
Well, I left already, so I hope I can sell them more digital strategy consulting to help them expedite the digital transformation journey.
Go for it. Bring that mindset. And coming to you, Olivier, then. Again, regrets from last 12 months. And
okay, so regret, I don't think we have done anything that has derailed us because, as part of the digital spirit, you experiment, and if you realize not going in the right direction, you can move fast, right? So I think nothing has been damaging, so no overall regret. I think overall is positive. And aspiration for next year, right? For within the next year, first of all, is to launch, and we are ready soon, and to be loved by our client. I hope in 1 year people will say they love
by our client. Wow, that would be awesome. Love it. So, that brings us to really the close of the session. And I think some very interesting insights that we have. I think this has to be one of the more interesting sessions, more candid. We heard a number of themes coming out, very foundational in terms of the lack of, or the more emphasis thrown from the top, the culture, the mindset, and that drives then the collaboration, the kind of team mix, the kind of the business model innovation banks, be it challenger banks or established banks, are able to bring to the table. Thank you very much. I think this has been absolutely insightful. And with this, Faizal, I hand it over to you to really summarize and close.
Yes, thank you very much, Ashar. And we're at the end of our panel, so we don't have that much time, but we do have a minute or two, and I'd like to pose your own question to you. So, in the interest of fairness, tell us what has been the one regret for you as an organization, Aion, and then obviously your aspiration for the 12 months, and then I will close after that.
Okay, now that is a real curveball, right? One regret over last 12 months would be we could have gone more bolder. We could have been bolder, faster in the market. We had some great ideas, great solutions, great access to the regional market. But again, we took a bit of a more conservative approach, I would say. What do we want to achieve in the next 12 is really have a team of 150 people. And I say a team, of 150 people who build a few digital banks in the region, and who are out there then helping new challenger banks and existing transform and build.
Excellent. Thank you so much, Ashar. Just to confirm, I have recorded this, so in 12 months' time, we will be going through all of these with all of you. So let me start by thanking each one of you. Ashar, thank you. Ahmed, thank you. Aidan, thank you. David, thank you. Olivier, thank you. Last but not least, Yetunde, thank you. Thank you to all that have been listening in. My colleague, Philip Parecki, will be with you in about 10 minutes with his panel, Political Risk Minimization, Understanding Investor and Asset Protection.